Good afternoon. Welcome to Options Center. It's Saturday, April 20th, 2024. Welcome, everybody. This is our weekend update. We're going to go through SPY and QQQ on multiple time frames. We're looking for a bounce into these territories. We had a large move to the downside, and we're getting a little bit stretched. And I'm going to give you a couple of scenarios on what we're looking at. Plus, I'll reiterate the pathway that we continue to monitor. And I also want to spend a good amount of time on Tesla. Tesla, there's going to be an argument. I'm going to make a bullish argument for Tesla. NVIDIA is clearly, we're not going to go through NVIDIA, but it's clearly turning down, and it's pulling the market with it. And I think that you could probably have a pairs trade for NVIDIA and Tesla. I think Tesla is looking bullish, at minimum a sideways consolidation, and NVIDIA very bearish. So I think they'll kind of counteract each other in different ways, with NVIDIA having much more weighting on the market than Tesla, clearly. But reversal to the mean, right? And I think that's what we should expect from those. Okay, so if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. I'm going to try to go through this as quickly as possible. It's going to take some time. So if you're just interested in Tesla, you might want to zoom a little forward. But I want to bring you into the market, and I think we can tie those things in together. So here's SPY on the monthly time frame. We're forming a large bearish rising wedge. We're not quite to the top of it at this point. There is a scenario that I'll show you on the daily time frame that we do make it and test the top here of the wedge, and that would be another selling point. I do think we have the intermediate term high in, if not a long-term high at this point. My primary scenario is that we have a long-term high in, but we won't know that until the future. So once again, we talk about consolidation areas. We're getting stretched in the lower time frames, but on the monthly time frame, we have two spots. You can really argue three. So right off the bat, the 8 EMA is right at the previous all-time highs. So that's going to be a test. That's around the 480 area. I'm looking more for the breakout zone down at this 460. And then even all the way down, possibly on the monthly time frame, down to 417. I think that's less likely. I think the 20 would be a monthly time frame, would be a good spot, somewhere in this consolidation zone. But the big test, I think, will be right here at 460. I think that's the zone where we broke out, where I think the price action will determine, after we get a larger bounce, whether that continues to the upside or if it's a failed bounce and continues lower into a deeper recession type price action. I think a lot of that will have to do with the Fed and the Fed pivot, but that's not for this video. Okay, so we're going to go to the Qs. On the monthly time frame for the Qs, like I said, I think we're getting really into this territory. And tech is kind of the tail that wags the dog. So we're getting right to support at the 8 EMA for the monthly time frame and the former all-time highs here. So I think this would be a good spot just a little bit further down around the 408, 407 area, to where we might get some sort of bounce. Now, the monthly time frame is, we still have a little bit of time left on the month. So this candle is so far an evening star reversal, but we might get some sort of bounce. Maybe it's a pretty, we have tech coming up, tech earnings, so maybe it's a pretty quick bounce. and then, like I said, then I believe we head lower, but I will be looking for just a dead cat bounce. I'm not looking for highs at this point yet. Now, I'm not going to look at the oscillators here. Let's jump back to SPY on the weekly time frame. On the weekly, we'll start to look at some of these. We'll peek into the oscillators. Let's go weekly. Here, okay, this says a lot right here. We're right to the 20 simple moving average. Again, I'm looking for these test zones for all the way down here, 450, 460. Our first, on this time frame, our first zone for a real test, I do think we get a bounce around this 20 weekly, but our real test will be around the 472. Now, you're going to have a talk, here talks about the kiss of death. If and when we start to get underneath this 20 simple moving average on the weekly, that's very bearish. But the back test on that 20 weekly would be the kiss of death that people may talk about. So if we decide to go much lower to this the 455 zone, we start to break down here after not in a straight line. If you start to break down to these zones and we back test that 20 weekly and start heading lower, that would be the kiss of death. That's what they're referring to. So again, we're looking at, if you look at these candles here, you have a little bit of consolidation. We're getting to the bottom of that consolidation right here. I do think that's a good spot to bounce. The Qs on the weekly time frame. Okay, so we're getting, again, into a zone for a bounce. You saw in the higher time frame. Well, we have a consolidation area here. So at any point in this consolidation, you have the top. That would be a good support area. Again, around this starts off at about 410, and then you have volume that picks up inside a consolidation zone. So a lot of times you can call it the bow and arrow support or resistance right in the middle of consolidation. That would be the volume node. Well, that coincides perfectly with that 407 area. That's also a trend line here. So it's possible we head down about 7 points. We don't have to, but that would look really symmetrical, if I would, easy on the eyes. So I think we have a little bit more downside to go starting off the week, and then we have Tesla on Tuesday, I believe, after the bell. And that's why we're going to talk about Tesla, because I do think the earnings could be anything. You can gap down, gap up. Technical analysis, I'm not sure that works really well with earnings in particular, or those type of catalysts. But I would say that so far, I think we'll show you exactly what I'm talking about in just a few minutes. So I don't want to rattle on here. Let's go to SPY on the daily time frame. I said I'd look at the indicators. I'm going to save that for no. We'll look at the indicators on the daily. There's nothing on the weekly that suggests anything at this point other than we're bearish. Okay, so on the daily time frame for SPY, getting near that 100 simple moving average. So again, we can have a little bit lower to go. We have some space down low. So what I think we're looking for, if this is going to be just a continued waterfall, there's two scenarios I want to look at. This consolidation area up here, and I think that this move, we'll look down at the 65-minute. I think this move is almost over, and we get a larger bounce at how this is playing out. But we have to keep in mind, and that's why we'll use, as we start to turn to the upside, when we start start playing what calls, we will use some put protection as we go to the upside, and then we'll start to increase our as we get a bounce, we'll start to increase our long-term puts again. Okay, so after this consolidation. We broke down from this area. We're coming into the 100 period, and that's just so happens we're at support right now, and we have just a little bit of space here for continued support. It's so choppy in these some of these zones that we could easily just spike through and just start heading to the upside. But we'll be looking for a reversal candle coming up this week. So if we get some sort of doji or some sort of pause candle, that will be a good reference for us to say, hey, we might have a reversal in play. Okay, so looking into the Qs on the daily time frame. Oh, wait. Sorry, getting ahead of myself. Okay, so like I said, I think this is just a bounce. We're into the oversold territory. We're pretty deeply oversold. We broke down from this consolidation area. Now, I do think we have a oversold bounce. Maybe we test back to the 50 area and we continue to the downside. I don't think until we start to get to these levels down here, the targets that I was talking about, I don't think we'll see any positive divergence until those areas. Now, I think otherwise on Tesla. But going to the Qs, just looking at the traditional technical analysis first. We had our drop here, huge consolidation and triangulation here. It broke down from there and just a massive move. And we're getting near the previous all-time highs back here, and also this consolidation zone and that trend line as well. So we do have some room. I think this would be a really good spot right here, about 410 for further downside. But like I said, we have close to this let's call it 407 to 410 will be our zone for a bounce. Now I think NVIDIA drags us down to these levels. NVIDIA is just doggish. It looks terrible. So maybe the next video we'll check out NVIDIA, but I think it'll drag the entire market. And plus, you have Amazon and Meta. A lot of these stocks have not even been touched yet. So if they start to play a little bit of catch up, that's going to drag the market down a little bit more going into it. Probably not drag SPY so much. It'll probably be the Qs that really get the move to the downside, while IWM and DIA, why they kind of stabilize SPY for just a little bit more downside. Looking at the oscillators, again, heading into bearish territory, getting oversold. It can get more oversold, but we're getting to that zone, getting to that point where we're going to look for some calls. We had some calls going in, I believe Thursday, looking for some sort of bounce, and those certainly did not do well. But luckily, we're keeping our swings to the downside, and we're almost out of those swings. So again, slow stow, oversold, looking for a bounce. Let's go to SPY on the 65, and then we'll really just kind of give our bullish scenario for. I might even just check out the VIX real quick, but let's do that. Let's do that before we go down to the 65. On the VIX, I just want to show you real quick what we were looking at, and not on the mobile, on the daily time frame. So we have this large falling wedge, bullish falling wedge for the VIX. We were testing that. We looked like we were breaking above it, retreated from there. So now I think we're getting to the bounce territory. I don't think this is the breakout. We talked about getting up to these levels, and now we're rejecting off there. So I don't think this is the time for the large breakout. I think that breakout will happen just a little bit later after some consolidation or some retracement. So we're back at that 19 area. We could probably gap down on Monday or so. It's possible. And, just kind of retest just a bounce for the VIX. But I do think ultimately it heads a little bit lower. And while the market begins to rally. That's all I want to show on the VIX. Let's go to SPY. On the 65 minute, so for the 65, we have these different zones here. I thought this would have been a good spot, but we just kept falling and falling from tech, just dragging down. So we have another zone right here. There's another support. We could make it down to that point before we bounce. And this isn't a channel bottom yet. I'm just kind of tracking. So SPY goes down a little bit more. I'm just going to use that and start a channel as this wedge progresses, because I want to have that channel there to see where this might take us, and start getting ahead of this move here. All right, so I think this will start forming a channel. We'll get a bounce, and likely that we'll reject off the channel top, or we get a fake breakout from that channel top. Didn't really want to spend. Yeah, we're building bullish divergence on the 65 minute, so that's clearly looking for a bounce. Price is falling. Oscillators are moving to the upside. So we'll look for that to end pretty soon. Maybe into Tuesday, or like I said, maybe into earnings with Tesla. Okay, moving to the 65 on QQQ. So we're at this point right now. Can we bounce directly from here? Sure. Maybe we get just a meager little bounce here, and we continue lower. We have the trend line down low. Maybe this is the low right here, and we just continue up. So looking at these consolidation zones, it appears to me that these are just large wave 2s and big consolidations. So I was expecting a bounce for wave 4s into wave 5s, but I think we're just getting them real small, choppy ones. The rule of alternation for the wave 2s is are much larger, and the wave 4s here are just a waterfall effect, and they're small wave 4, almost a capitulation type action. And so we'll be looking for a low pretty soon. We're already scaling into, we have a couple Tesla calls and Apple calls so far. So we'll see if we come down just a little bit lower. This is a good spot here, but clearly there's some places here as well that will play just as well. And you have the 410, and you have the gap down here at 407. So we'll see how far NVIDIA really drags us down. And yes, I'm putting emphasis on NVIDIA. Okay, I know I'm jumping around. I didn't have a clear thing I want to show here, but we did have some price and time relationships here on the 19th. So that was Friday. So maybe this is the low going in here, and we get a bounce starting on Monday. But then we have some more time and price that we're going to work with coming out through the week. Sorry to jump around because I have the Elliott wave. And we're going to go to the daily. For those who are new here, we're looking at this expanded ending diagonal. That's what we've been looking at for a long time. We have our one. They're all 3-wave moves. There's 5 waves. You have 1, 2, 3, 4, and 5. It expands as the waves progress, and then you have a blow off top. That's the definition of an expanding ending diagonal. That's our blow off top. I do think we get a deep retracement. This isn't the point where I think it's necessarily going to go. It could go further. I'm actually looking for a possible cross over this previous high here. So a nice move. I do think we'll get a bounce before that. This is not going to go in a straight line necessarily. Now, our alternative on the lower time frame is that we have this larger consolidation up here. We break down for a nice wave 3. And we just get some sort of sideways movement into this time zone, and then we start heading lower before we bounce. So I know that we're all over the place on this, but I think we get our bounce soon, and as soon as next week. Now, this is our primary scenario where we get a bounce, and again, these aren't placeholders. This is not the price action we're looking for. Until we get more information, we won't know the retracements and stuff like that. So I do think we had lower, and then we bounce, and we have a dead cat bounce, and we had lower from here. And then our bullish scenario, and they both kind of fit the same scenario, just the outcome is different, is an ending diagonal. And I know this, again, this chart is busy, but we have time references here. So this would be the ending diagonal, where this all is wave 1 and a 3-wave move. This is wave 2. We had wave 3, much larger wave 3. We're correcting into wave 4 now, which is going to look just as sharp. It's going to be confusing whether or not this is a 5-wave impulse move or it's a wave 4, because it's going to be some sort of diagonal. So we could get an A, B, C, or this could be a 1, 2, 3, and then 4, 5 happen down low. It's not going to be easy to see, to identify, so we have to keep both scenarios in mind. So if this is a zigzag, A, B, C, then we come down to wave 4. Like I said, wave 4, it's not unusual for it to cross over wave 1. Okay, so we'd come down to these retracements, and you can't see them. They're in yellow here is 50-60% retracement, which is our golden retracement zone from top to bottom. Okay, excuse me, from the bottom of this move here of wave 2 to 3, that would be our 50-60% retracement. And then we also have retracements from the top to bottom as well. We'll look at those later. And then we have some time references going out into May. So I do think we're going to find ourselves bottoming out into some of these time references, whether that's the 28th or early on to middle of May, towards the end of May here. We'll have to wait and see what price action is looking like at that point. When we start to get our bounce here, I do think the bounce is going to be a 50-60% sort of bounce. Now, it doesn't have to be this. It could mirror what happened to us on the upside. This could, get a really small bounce. So that's why you got to use your put protection when we start to get this bounce. It could be a small bounce and then head lower, just to kind of mirror this side. But in my opinion, more often than not, we get a bounce to where you pull in a lot of the bulls, you reset oscillators. It's a deep kind of rip your face off rally, and price action has a deep retracement into the 60%, and then we continue lower. And now, obviously, you see we don't have a whole lot of time to do this, so rip your face off rally, and this next move should be sharper, steeper, longer than this one here because of the momentum. So it's not going to be pretty to the downside, and that's where it's going to be confusing, where we get our bounce from in the long run, because we're going to have that momentum capitulation type move. It's going to put this move to shame. All right. So, because it's either a wave C or a wave 3, it's going to be very impulsive and very fast. And we'll probably see quite a few gaps to the downside. Unlike this one, we had all these, we gapped up, and then failed. Like people were buying the dip. And so we'd gap up and just fail. I think it'll be quite opposite on this next move to the downside. I think we'll have some moves where we think we're going to bounce, and then we just gap, percent lower underneath there and continue. Sorry to take so much time here, but let's go over to Tesla. Okay, we're going to start from the top down, and I'm even going to start with a weird time frame here. We're going to go all the way to, this is how we're going to start our bullish argument. We're going to go to the year time frame, yearly candles. with, let's put 15 years on here. I don't think it's been trading for 15 years. Okay, so these are yearly candles. You see this 8 EMA? Price action has stayed above this 8 EMA this entire time. I think we're right back at that point. We can spike through. You see the spike happen over and over. So yes, price can go lower than that 8 EMA and it could spike through. We're kind of at that point right now to where we could bounce. We're in the zone. And that's the argument I'm going to make. Now I'm going to show you on different time frames. On the monthly, on this monthly time frame, it sort of looks as if we have a long way to go. It's certainly possible if the bearish scenario plays out. If this continues to fall, then you see our next level down here at 123 is quite probable in that kind of mind frame. And so just from looking at this point of view, it looks like this could just fall. You're grasping for straws here and knife catching. But as we start to look at maybe the oscillators, for example, on the monthly time frame, we're really just sideways here. We're starting to bend to the lower end here of the bearish territory, but really we're near the zero line. We are oversold. We're right here at the 30.98. So if we get just a touch more downside, it really will be in the oversold territory. And if this is a bullish chart, which I think it is, I think that we just touch 30 and we start to head to the upside. All right, we're already oversold on the slow stow on the monthly time frame. Okay, so these are now starting to give us clues. If you look at just the traditional technical analysis, you have these. It's possible it could be a 1, 2, 3, 4, and 5, and that this is done. But there's different ways you can count this, and so I think this could be a 1, 2, and then you have a higher low here, so this could be easily be a 1, 2, 3, and this is a wave 4. The wave 4 could have ended already, or this could be a sideways triangle. So far, it's just sideways. But then again, I'm going to show you on a different time frame, and we'll start to build this analysis, this bullish analysis. So on the weekly time frame, this is sort of a drawing of, hey, this could just go sideways. We'll see what the earnings bring next week. Could bring a bounce, but if we reject off of these higher areas where the 200-day moving averages and the downtrend is, then we certainly could get that A, B, C, D, E, where the end of the triangle would be there, and then we continue to the upside, which is a bullish scenario in itself, but maybe it wouldn't be so bullish as we're thinking at this point. Now, here is where we're going to start to draw out some scenarios. If we take this downtrend line and draw it into a channel, it's not unusual for the left shoulder, if you have an inverse head and shoulder, it's not unusual for your left shoulder, the head, and the right shoulder to be symmetrical with the left shoulder. That would bring us right into support at this point. Okay, support right here in this consolidation zone. We are at the top of that consolidation zone, and we're kind of dipping in there. But really, like I said, there's a lot of volume right here, a lot of volume playing out. So that's our bow and arrow support or resistance, and we're just about at that point. You can call it 444, a zone, 140. I said 4, about the 140 to 144 area. That brings us just about into that area. If you draw that this is a falling wedge, just like that, we're just about into that territory. That would be the top of the wedge. This would be the bottom where you had a spike through a fake break. And so we have this sort of, just this area of support that just came out of kind of nowhere. If you look at it at a glance, it doesn't look like there's any support. And now we can see that there are some different support areas. Now looking at the oscillators, we're kind of fading here, but not dropping on the MACD. And so you see actually some bullish divergence on the histogram there. You have bullish divergence on RSI, and we're in oversold territory. That's a buy setup right there. And you see we're getting real tight price action after being oversold with positive divergence on the slow. So this is on the weekly time frame. This could be very powerful. This could be a very powerful move, and I'll show you different scenarios of what I think could happen with this move, the results. Going to the daily time frame. On the daily time frame, you see that we have this falling wedge. We're getting tight in this price action here. And at very minimum, I think we get a bounce. But really, to me, this looks really like an ABC for an A, B, and a C impulse move. This looks very corrective. This looks corrective to the upside. Obviously you can jam in some numbers, but really looks like a big three-wave move. So this looks corrective as well. This started off, I thought this could be a very large move to the downside. And this could go multiple ways, but from the different clues that we have, I think this move is almost over, and that's very corrective. This is an ABC correction going into support. You have the gap support here, and it just so happens that I've had this support line here for a long time, and I actually have to update it. Let's bring it over to the right. And so there's our 141. So that 140 to 144 zone that I was talking about, gap support and support there from that bow and arrow support. Okay, a lot of supports there. Looking at the oscillators, bullish divergence. We're oversold in the daily time frame. I think we're going to get our reversal soon. We have the awesome oscillator giving us bullish divergence. That's all I want to show on there. Now I want to show you assuming that we still have a top here. Assuming this top is good. If you're bullish, there's two scenarios. If this top is good here, then we have an ABC down for an A, and then an A, B, larger B, C for this larger B, and then we go much lower if the market is going to be very terrible and we get new highs in the market or lower high, whatever the case is, and then the market crash starts to continue, then I think this would be this likely scenario. We get up to the 786 and we head much lower with the market. If the market is going to make new highs, or this is just counterbalancing off NVIDIA, and NVIDIA keeps dropping, but Tesla kind of stabilizes things, then this clearly could be an inverse head and shoulder, and then we make brand new highs. And in that case, this might be some sort of ending diagonal at some point. All right, so this would be made up of three-wave moves. This could be wave 1, a deep wave 2, wave 3, 4, and 5 to the upside, all made up of three-wave moves. And that's very typical for the end of a wave structure. All right, so that's how, if you're bullish and things look really bullish on the market, you want to be in Tesla. Tesla's been ripped apart, but as of this point, no matter what happens in the future from there, I think this corrective move is over. Just about. We're heading into the 786. We're just a few points. And guess what? It's at the 144 support. all this confluence of support is coming together. And so we're going long Tesla, and probably quite aggressive at that. On the 65, do 65 minute. It's kind of messy here, but we have tons of gaps that I think get filled. All right, those aren't going to last long, and I think this move is almost over. We have this small wedge here that looks like 5-wave move is complete. We have a 1, 2, 3, and then a smaller ending diagonal here. So we might have just a couple more points to the downside, but this wedge is certainly a great setup for this move. I didn't change it. Don't look at the options expected move. I didn't update that stuff yet. I want to get this video out. I'll do all the options expected move and more of other things on a later day, maybe tomorrow, next day. But yeah, I think this move is almost complete. We had from this top here, that was the ABC, and where this whole entire wave that's on the screen is wave C. And we have a 1, 2, 3, and then wave 4 is a triangle, A, B, C, D, E, and wave 5. And wave 5 is very limited on the amount of move it has because it cannot be larger than wave 3. And it's it's already at about 786 extension or so. And so it's smaller than wave 3 right now, but it doesn't have much room to go. Maybe 3 points or so, which would bring us about the 144 would be appropriate and fits perfectly. I think this is a big bullish setup for Tesla. Now, earnings might surprise. It might not do anything until a couple days after and Tesla starts to move up, or we might get a big surprise to the upside to start this bullish move. But until we see that, this is a huge setup. I can't resist taking this, even going to earnings. I usually don't play earnings, but this is a setup that I can't pass up. So I wanted to pass it on to you, and I hope all this helps. So thanks for joining us here at Options Center. Have a wonderful day, and we'll talk to you soon.